Welcome to the Daily Insights that matter. Amid all the talk about a potential global recession, the World Bank recently released its report on the global economy. Talking about the good news first, global GDP is expected to increase by 2.1% this year for the year 2023, higher than the previous forecast of 1.7%. In January, the World Bank had warned that global GDP was slowing to the brink of a recession. But since then, strength in the labor markets and consumption in the US has exceeded expectations, as is China's recovery from the COVID-19 lockdowns. However, it's not all sunshine and rainbows. The World Bank cut its 2024 global growth forecast to 2.4% from 2.7% in January. This was on the factors like tighter monetary policies and restricted credit conditions. These factors are expected to slow down growth in the second half of 2023 and into 2024. But hey, there's also a silver lining. The World Bank has a new growth forecast for 2025 and it's pegged at a promising 3%. Talking about India's GDP growth, it is estimated to grow at 6.3% for fiscal year 24 as compared to the previous estimate of 6.6% in January, according to the World Bank. The revision was attributed to the constraints faced by private consumption due to high inflation, increased borrowing costs, and fiscal consolidation, which is a reduction in the underlying fiscal deficit, which is weighing on government consumption. For fiscal year 23, India had shown greater than expected resilience in private consumption and investment, and a robust services sector maintaining a stable growth of 7.2% for the entire year. Despite this downward revision for fiscal year 24, India remains as the fastest growing economy among the emerging and developing economies in terms of per capita GDP growth, which is expected to grow at a healthier rate of 6.4% for fiscal year 25 and 6.5% for fiscal year 26, which is a positive development. In a report by Goldman Sachs, a renowned investment banking firm has expressed its optimism regarding India's domestic market, considering it a prime opportunity to create multi-bagger investments. In an extensive research of over 6,000 stocks across 6 emerging markets and 4 developed markets since the year 2000, Goldman Sachs reported that India had the highest share of multi-baggers. The NSE 500 had 269 stocks that generated more than 10 times return during any one period for 5 consecutive years, called as a rolling 5-year period, over the last 2 decades. India showed the highest proportion of multi-bagger stocks with 54%, followed by Australia at 35%. China and US had a mere 18 and 16% of multi-baggers respectively. Multi-bagger stocks are those stocks that have delivered high returns and are efficient capital allocators. These multi-bagger stocks shared the following traits: high promoter holding, low starting valuations, high capital return ratios of ROE and ROIC, domestic sector orientation, and high profit and revenue growth. Goldman Sachs is optimistic about India due to its stable macroeconomics and strong historical track record and maintains an overweight stance. Additionally, India's aggregate equity market cap has increased 12 times since the year 2003, and the average market cap to GDP ratio increased to 87% from 76% in the preceding decade, indicating an ongoing capital market development. With the Make in India PLI schemes and strong capex playing out well, India still maintains its stance as the fastest growing economy, as we discussed in the previous story. While I say this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com